Kadena is following textbook Elliott Wave and Fibonacci patterns, and the price is getting ready to explode. We did a video around a week ago, and it is panning out perfectly. So we are going to do an update on how you can peg the low. We're more than likely going to see a reversal, and then the price is likely to take off. So if you like today's video, like, subscribe, hit the bell notification, and if you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. Now, quick thing, even though we're focused on Kadena, this lesson is way beyond. It's all about learning and reading the psychology of buying and selling. I don't know much about the fundamentals of this project. I know it's a blockchain. I know it's a new blockchain. I know it's making some noise. I know it's a top 100 coin. I know it's a 1.4, 1.5, $1.3 billion market cap. But we're going to put that to the side, and we're going to look at purely speculation. Purely, right? No noise, no news, just pure the art of TA, technical analysis. So this was a part of the last video. I just want to do a quick update. What we said was, is looking like, if I can just pull up a laser over here. Let me get rid of this. Let's go. Let me get this laser. Yeah, what we said is looking like a nice A, B, C correction. This wave too low, and then we'll expect a reversal before Jan 28th, because we did some time targets, and I showed you how. We said the market moves in typical 5-wave sequences followed by a 3-wave correction, right? Normally 5s and 3s. Just keep thinking 5s, 3s, 5s, 3s. 5 on the way up, 1, 2, 3, 4, 5. 3 on the way down before the next cycle begins. Now, if you're not familiar with Elliott Wave and Fibonacci, it's one of the most powerful tools that I've ever come across with reading all markets, but especially cryptocurrencies, whether it's Bitcoin or microcaps. Doesn't matter. It applies around 50 to 70% of the time. So take my free Elliott Wave and Fibonacci masterclass, because I teach you how to do this. So we are now expecting Cardano to be here. We can do a live update in a second, and then the next move to the upside, typical for all markets, is a wave 1, a wave 2, followed by a wave 3, because the markets are always expanding and contracting, and the 5s and the 3s just keep repeating itself, and then there's a macro cycle, then a micro cycle. There's a few intricate things that you really want to be aware of, and the psychological rules that mass herd psychology just repeats again and again and again. So what we said was, this is where we anticipate Cardano to be. Then I just drew over the chart to say, look, 1, 2, 3, 4, 5, wave 1, 1, 2, 3, we're expecting this low. I'm just drawing the theory over the practical, bang, bang, bang. That's what we're expecting, right? So now, what we did at the end of the last video was we said, look, we expect these two price targets, 7.4 to 11x. These are two price ranges, $44 to $68. Whether you agree or disagree, this is just objective, non-emotional technical analysis. But the key I wanted to focus on here today is just mapping out perfectly. Now, it doesn't mean it's going to happen, because we can only do probabilities and never certainties. But what tends to happen for a wave C, this is a wave C down here, is it breaks down to 5 waves. 1, 2, 3, 4. We was at this 4 the last time we did the video, and now we look like we're forming this 5 to complete a wave 5 of a wave C of a wave 2. Right, there's 3 degrees of count. If that doesn't make sense to you, I explain it in the masterclass, but it's really, really powerful information. So now let me just get rid of these drawings and bring this up. So I just zoomed in. We're going to go into a live chart now, but in the last video, right, we said this in advance. This is the key. We said this in advance, and it's panning out just as we anticipated. We said, looks like an A, B, C of a wave 4. So we should anticipate one last leg to the downside. We projected around $6, and at the time we'll look at, I think it was around $10.20. Now it's around $8 or just below. We look like we're forming this wave 5, right? Hopefully this is making sense to you, because I'm repeating myself again and again. But some say repetition is the mother of all skill, and sometimes it just takes hearing something 7 times to really hear it for the first time. And I'm hoping you're now hearing it for the first time, because we did this in advance. Again, we haven't had the price reversal yet. We haven't had that yet, but we're not anticipating that just yet. We got a few more things that we should anticipate. So I think that's the last slide. Yeah. So now let's just jump into a live chart with Kadena, right? Kadena. It sounds close to Cardano. Right. So what we're going to look at now, we're just going to kind of wrap this up. Very, very easy, very, very smooth. Is let's just do a quick summary. We've had this nice movement to the upside, wave 1, a nice wave A, a nice ABC of a wave B. This is textbook stuff. And then a wave C, which looks like it's breaking down to a 1, 2, 3, 4, 5. And this is this price. And well, we actually had time here as well. I've deleted those lines, but this is a really tight price zone. Also, this is the previous wave 4 low. And normally ABC corrections quite frequently end in the previous wave 4. So this is a very high probability zone for an end of a wave 5 of a C of a 2 of a correction, right? So two things I want to focus on. Keep it very, very simple, very, very mechanical. Top left-hand corner, I keep my weekly chart. We said this in the last video. The weekly looks incredibly oversold. The momentum is, let's just see the official numbers. It's still 5 and 5, which just means it's flat, but it's in the oversold zone. So we're expecting, one uptick will really just reverse this trend indicator down here. This is what I'm referring to. The stochastics RSI, this particular setting. I know a lot of you ask me what are the settings. This particular one is 13855. It reads the tops and the lows quite well. Oh, that was the wrong button. I need to double click. Yeah, if you look at it, it's pretty good. It gives us a good indication that sideways to up, we should anticipate for the coming few weeks. And then we jump into a daily chart. Top right hand corner is where I keep my daily chart. And I just want to zoom into this. So what we say is, on the next daily bullish reversal, and we said this in the last video, but now we're coming closer to the time, is this blue line, is this fast line, we call it the blue line, the fast line, is in the oversold zone. When the blue line crosses over the red, and we get what's called a momentum reversal. Stochastics RSI is a momentum reversal. And we are in, I'm going to zoom in like this, a pattern, a wave 1, 2, 3, 4, 5 of a wave C of a wave 2. Remember, we've got the wave C of the wave 2 down here. Let's just pull it up like this so we get it nice and close. So now we've got momentum on 2 time frames. Weekly momentum is oversold, so it's looking to turn to the upside. On the next daily bullish reversal, we're going to have 2 momentum indicators pointing up. The trend is your friend. Ride it until its end, until it reaches its bend. Then we're looking at pattern on 3 degrees accounts. That is very significant, very significant. We're talking about a wave 2 on a macro, so it's a 1, 2. We're talking about an ABC of an intermediate wave count, and now this wave C is just breaking down into textbook wave 1, wave 2, wave 3, wave 4, and what looks like a wave 5. Why do we know this is a wave 5? Well, this previous low of this wave 4 has now clearly been exceeded. Whether we take that as the low or even this as the low, it has been exceeded to the downside, which now confirms that this swing high is a swing high, because now we've got this new low that's taken out the previous swing low, right? So that's very, very important, significant information. And then we've got Fibonacci price. We did all these price clusters the last time. There's these cluster of lines, and not just lines. These are measuring psychology, buying and selling of mass herd psychology on a macro wave count, which is the wave 1, wave 2. So we've got big retracements. We've got the ABC intermediate wave count, so relationship with a wave A and a wave C. And then we've gone into a micro wave count, 1, 2, 3, 4, 5. The relationship of this. Let me draw this here for you. This wave 1 and this wave 5 has a direct relationship. This wave 1 to 3 and this wave 5 has a direct relationship. This wave 4 and this wave 5 has a direct relationship. So we have this cluster of price and time, and we're coming into that zone now. So now we can get ready for an order. So if you're trading this, I'm not in Kadena, by the way, and I'm not even looking to buy this. I'm just doing this because many of you have requested to do your TA. But this TA, technical analysis for Elliott Wave and Fibonacci, is bigger than Kadena. And what I mean by that is it applies to all markets, all cryptocurrencies. And when the pattern is this clear, we have to use that edge. And it is an edge. It's high probability and never certainties. That's why we always have proper risk management. So on the next daily bullish reversal, meaning the blue line crosses over the red, we go, boom. Now everything's lined up for an entry point. And now you can have one of two. We can have whatever entry strategy you have, but you can be a conservative individual and you can say, all right, I want to enter on the swing high, like we said the last time, which is going to be up here. If I can get this here, boom, boom. Yep. So if the price goes above here, because that's quite far away from the market. It's around $10. It's around, it's $8. So I'm going to show you a more aggressive entry strategy. But why would you consider an entry? Well, the price movement that we're anticipating is a wave 3 next. And I think we drew this the last time. Yeah, we drew this the last time. And we said, look, these are the price movements. So now, when we take the grander picture into account, this is very significant to the upside, right? We're talking a potential $44 to $68. Again, this is just pure speculation on human psychology. If the trend reverses, this is what tends to happen time and time again. But then you might be thinking, Jagir, I got confidence in Kadena. I like the technicals. The psychology is really lining up. But I want to get in earlier, and I'm happy with a bit more higher risk. I got a higher risk tolerance. Then you just literally do something called a 1 bar high, right? You go a 1 bar what? So if you go to a candlestick chart, it's easier to see, or a bar chart, but candles tend to be easier to see. You see every line, this red line, let me just get this arrow up, represents a day because we're on a daily chart. What you say is when it reaches the minimum price and time zone, we're in the time zone already, and we get the bullish reversal, that we're going to be patient and wait for the blue line to cross over the red, right? Blue line to cross over the red. Then you simply put an order in or buy when the price goes over the previous 1 bar high, right? So you just literally go, this is a 1 bar high. Let's just go from this point to this point. Let's just say, I'm just going to use this example. I'm not saying this is what we are doing. Let me use, I'm just gonna track it back to, just so you can kind of get a visual on what it looks like. I'm gonna use this as an example. Again, we wouldn't trade this because the pattern price is not lining up, but this is just an example for a 1 bar high, right? So we say when the blue line crosses over the red, it's not perfect, but it will give you the thinking, right? The blue line, we're gonna wait, bang. All right, we can clearly see the blue line is now over the red. Hopefully you can see that. Anyway, let me zoom in. Right, you see that? The blue line is over the red, and it's now lined up with the weekly. Right, that's in this example. And then you say on the 1 bar high, we are gonna go long. So we're gonna go long. If you're using the stop loss, you put it below the previous swing low. This is the aggressive stop loss, or if you want to be a bit more conservative, it will be down here on the previous larger degree swing low. And then if the price takes the high out, which it does here on the next bar, you're entered into the trade. You're into the position, or however you're managing your position. If you've got a stop loss, it's down here, and then you just let the position ride out. And what I mean by that is then you have a whole management position. So that's what we're going to look to do here. Now this, what I'm showing you as the example, is more just the entry of the 1 bar high and low. We wouldn't have taken that because we haven't got everything lining up. Whereas this one, everything is lining up, right? We got momentum on 2 time frames. We've got pattern on 3 degrees of counts. We got Fibonacci ratios in a tight cluster on 3 degrees of wave counts. And we've got a time ratio. So when we wait for the next bullish reversal, 1 bar high, literally, let's just say we had the bullish reversal, is you're literally just moving your entry point to the next 1 bar high, and you're basically waiting for the market to enter you. Because if it drops down, you don't want to be like trying to catch a falling knife. You want to just wait patiently, and then as it's getting closer to that extreme after the reversal and it enters you in, then you just manage your position. Now, keep in mind, it doesn't mean it's going to take off, right? This is where you have risk management, right? But if you are right 3, 4, 5 times out of 10, 6 times, 7 times out of 10, but when you're right, the market moves like this. The market moves like this, and when you're wrong, the market moves like this. You can do your risk management so your gains outweigh your losses and break evens, etc., etc. So there you have it, Kadena. This was it's a masterclass. It's literally a masterclass. But take my official masterclass. It's in the link below. It's absolutely free. But I teach this in absolute depth. I'm just thinking, is there anything else I wanted to cover before we wrap up? No, it's just clean. It's easy. It's simple. I'm hopefully this is clear that you're seeing that we did this in advance, because the last video, actually I want to finish on one last thing. The last video that we did, again, I'm going to go back to the line chart. Let's just get rid of these lines. And what we said in advance was the price was up here at this wave 4. And we said we are likely to see one more wave to the downside. We said that in advance with confidence. Why? Because look at the momentum, right? The momentum is overbought, meaning that on the top side, when the blue line goes below the red And we got a pattern, coincident of pattern price on the downside, but on a micro degree. So we go, look, it's likely to go to the downside. Blue line crosses the red, bang, downside, right? And now we're going to do the reversal and wait for a trend reversal. One last, no, I said one last thing, one last second ago, but it's just coming to me, is if you're more conservative and you go, gee, I don't like trying to catch these bottoms. W.D. Gann said one of the best and safest ways, he's one of the forefathers of technical analysis, is wait for a trend reversal, which is a move bigger than any other previous move to the upside, and then enter on the first pullback, right, which is called a wave 2, right, on a particular degree of count. And this zone down here would be one of the safest times. Requires a bit more patience, requires a bit more skill, because patience is a skill in itself when it comes to psychology. And then you can get in on the wave 3 or wave 3. Pros and cons, but based on your risk tolerance, based on your psychology, you can kind of decide. So there you have it. Like, subscribe, hit the bell notification. Please, please, please take the free Elliott Wave and Fibonacci masterclass. I worked incredibly hard to take this very complex, sometimes boring topic of Elliott Wave, Fibonacci, ratios, numbers, lines, to simplify it in digestible layman's terms, English, where you can look at a chart now and go, I see it. Or you may say, I don't see it, and you just move on to the next. And then when the markets are moving to certain, especially when they're moving to highs, taking profits, when they're moving to lows, buying in for the first time. So let's finish on a quote. We're going to take it from my book. Let's go to chapter 8. I'm going to use the same one because this is so important. And they say repetition is the mother of all skill. So Henry Ford, it has been my observation that most people get ahead during the time that others waste. Now, we're in a bull run at the moment, and we can argue it if we're going to see a 6-figure Bitcoin or not. But also the crypto markets are so infant. So we're here to stay, right? Crypto's here to stay, the next 5 years, 10 years, 20 years, 50 years, and the rest of human history, just the way the internet is here to stay. So this bull run, the next bull run, there's going to be movements in between. There's going to be opportunities in between. So now's the time to really start sharpening your axe and get ahead. Because what we share today is not common knowledge, even with top traders. I know top traders, and they don't really understand the Elliott wave and the power of human psychology and the way we can really marry these lines up and go, look, it's looking like a wave too low. You go, yeah, but Jagir, Kadena is this, Kadena is that. I go, I don't care. Buying and selling behavior is buying and selling behavior. Mass human psychology. We operate as humans as 95% unconsciously. That's what neuroscience shows, right? So even when people are kind of coming to their own conclusions, we've got decades and decades and decades of data, centuries of data that shows this pattern coming and going again and again and again. So learn it, apply it, give yourself the edge, because you have to increase your financial health so you can really enjoy this banquet called life and the banquet of life. All right, I'll see you soon in the next video.